In a groundbreaking shift that could reshape the global cryptocurrency landscape, China appears to be reconsidering its once rigid stance on digital assets, and the implications could be nothing short of historic. For years, China has remained one of the most restrictive jurisdictions for cryptocurrencies, enforcing sweeping bans on trading, mining, and exchange operations. This hardline approach was seen as part of its broader effort to control capital outflows, prevent financial instability, and clear the path for its own state-backed digital currency, the digital yuan. But recently, a series of subtle but unmistakable developments have begun to raise eyebrows. Policy whispers, financial statements from high-level regulators, and regional movements in blockchain initiatives all suggest that a policy reversal may be underway. This isn't just a minor pivot, it could represent a seismic shift in how the world's second-largest economy approaches crypto. And while the broader market is watching closely, one digital asset seems to be capturing more attention than the rest: XRP. The possibility that China might open up, even partially to crypto, has sparked a wave of optimism among XRP holders. Speculators are already talking about a possible bull run, with XRP poised to benefit the most thanks to its cross-border capabilities and potential compatibility with central banking infrastructure. Could we be standing on the edge of the biggest XRP rally in its history? If China moves forward with this new attitude, the results could be transformational, not just for XRP investors, but for the entire digital asset ecosystem. Let's unpack what's really happening behind the scenes. Hello and welcome back to the XRP Ripple Insights channel, your trusted source for cutting-edge news, deep analysis, and real-time developments surrounding XRP and the evolving world of crypto finance. Over the past few weeks, an intriguing pattern has begun to emerge in the world of Chinese financial policy. While not yet officially announced by top government spokespeople, a series of quiet policy leaks, analyst briefings, and local pilot programs seem to suggest something extraordinary. China might be preparing to re-engage with cryptocurrency, but in a much more strategic and measured way than ever before. This isn't a full-throttle embrace of decentralization. Far from it. What we're seeing is a potential recalibration, a hybrid approach where blockchain innovation and selected crypto assets may be welcomed under specific regulatory frameworks. In provinces like Hainan and Zhejiang, local governments are once again championing blockchain as a driver of fintech development. State-backed media outlets have even featured favorable commentary on distributed ledger technology, DLT, including specific mentions of platforms that facilitate cross-border payments. And this is where XRP enters the spotlight. While Bitcoin and Ethereum continue to face stiff scrutiny due to their decentralized and anonymous structures, XRP's design and utility align more closely with regulatory objectives, particularly those tied to enhancing international financial interoperability and supporting CBDC rollouts. China has always maintained that financial innovation must serve national interests. If RippleNet, with XRP as its liquidity engine, can be framed as an asset that bolsters China's digital yuan in cross-border use cases, we may be witnessing the beginning of a remarkable alignment. This could dramatically elevate XRP's credibility and demand, both inside and outside of China. Even more fascinating is the increasing openness within Chinese fintech circles to discuss foreign blockchain technologies and their potential applications within China's vast financial system. Unlike in previous years, when any mention of foreign crypto projects was often met with censorship or legal pushback, the narrative is shifting. Industry insiders have reported more public conferences where RippleNet and similar platforms are discussed as case studies. Additionally, major financial institutions in Hong Kong, which serves as China's semi-autonomous financial testing ground, have begun experimenting with cross-border DLT platforms that theoretically could incorporate XRP or similar digital liquidity tokens. Analysts believe this may be a strategic move. If China allows Hong Kong to integrate XRP-related technologies under close supervision, it can test the potential benefits without compromising national financial sovereignty. From this perspective, XRP is uniquely positioned. It offers real-time settlement, institutional-grade compliance tools, and an open ledger that can still interface with permissioned systems, all factors that align well with Beijing's desire for control and transparency. Should this testbed approach prove successful, a nationwide rollout wouldn't be far-fetched. For XRP holders, the implications are massive. It wouldn't just be a regional boost, it would be a paradigm shift, legitimizing XRP as a globally recognized, government-compatible digital asset. Institutional investors are already taking notice, and speculative interest is rising sharply across Asia, with trading volumes beginning to reflect renewed excitement. In fact, some market analysts are now revising their models, suggesting that XRP could experience a surge not seen since the 2017 bull run, or even exceed it. If China gives even indirect support to XRP through its integration in regulated fintech platforms, the credibility and utility of the asset could rise to unprecedented levels. Unlike hype-driven price spikes, this would be based on real-world adoption, deep liquidity infrastructure, and potential alignment with one of the most powerful central banks in the world. What makes this moment so critical is that it comes just as global regulation is starting to mature. With the US, EU, and parts of Asia moving toward clearer crypto frameworks, a potential Chinese soft re-entry would place further legitimacy on cross-border digital payments, especially those that can plug into CBDC ecosystems. XRP fits that mold better than almost any other token on the market today. If Chinese state-backed financial institutions begin running pilots using RippleNet or utilizing XRP for settlement liquidity, the floodgates of institutional investment could open. Already, whale wallets are accumulating XRP at a rapid pace, and social sentiment metrics are showing bullish indicators not seen in over a year. It's still early, but the writing on the wall is becoming harder to ignore. XRP may be at the forefront of a new era where digital assets are not just tolerated, but actively integrated into the world's financial plumbing, with China potentially leading the way. Stay tuned, because if this momentum continues, we could be on the brink of a historical price movement unlike anything XRP has seen before. This pivotal shift in China's approach to digital assets is arriving at an incredibly strategic moment in global macroeconomic trends, a time when liquidity is finally returning to risk-on assets. After years of central bank tightening and aggressive interest rate hikes, inflation in key Western economies such as the United States and the European Union is beginning to stabilize. With inflation tapering off, major financial institutions are now anticipating interest rate cuts as early as this year, unlocking fresh capital that had previously been parked in safe haven assets like treasury bonds and cash equivalents. This capital is now beginning to seep back into speculative sectors, and few areas are as speculative or as potentially explosive as the cryptocurrency market. Within that space, XRP has remained one of the most underappreciated digital assets, largely due to the prolonged legal uncertainty stemming from its battle with the U.S. Securities and Exchange Commission, SEC. But that chapter may finally be nearing its conclusion. Recent court filings and procedural updates suggest that Ripple Labs has gained the upper hand, with several legal experts predicting a final settlement or ruling within the next few months. If that legal overhang is removed just as China starts to embrace selected crypto assets like XRP, we could be looking at one of the rarest occurrences in the financial markets, a synchronized alignment of bullish catalysts across legal, regulatory, macroeconomic, and geopolitical fronts. Add in rising on-chain metrics, such as whale accumulation, increasing transaction volumes on the XRP ledger, and a surge in developer activity, and the signs become impossible to ignore. This isn't just a whisper of a breakout. For veteran crypto investors, it feels like the calm before a potential supercycle, with XRP at the very center of it all. The notion that China, once the most aggressive enforcer of anti-crypto policy, could now emerge as a quiet champion for selected blockchain technologies is not only ironic, it's potentially revolutionary. After years of global crypto suppression, China's apparent shift signals more than just a change in rhetoric. It reflects a calculated and strategic effort to position itself at the center of the next evolution of digital finance. If the Chinese government, through its pilot programs, media coverage, and fintech integration strategies, is truly preparing to support blockchain-based systems like RippleNet, the implications extend far beyond XRP price movements. We could be witnessing the early stages of a global realignment in how cross-border finance operates, with digital assets finally moving from the periphery to the core of financial infrastructure.